Every instinct in me says that Bitcoin is about to drop and that this half recovery we have seen recently isn't really sustainable. Yet I'm trading exactly the opposite. Hi, my name is Gerhard. I'm in crypto for the last 8 years. I started this channel here 5 years ago, and 3 years ago I hit my first million. And in this video I'm going to share the approaches that I use to long-term outperform the market. On average, I outperformed buying and holding Bitcoin by 2% per month. That's then how that looks like over time. That's then how the portfolio develops when we add additional investments over time. I also opened a copy trading pool last year that made money while Bitcoin lost. Here's the average profit by every premium member that invested last year, and this year we are on good track again to reach our performance target of roughly 40% per annum. Now here's what I do differently to most others in the space. Most people try to re-evaluate the situation day by day. They're reading the news, they're reading what's going on, and they're trying to build an advantage over the average market participant just by being more on top of the situation. But I think it's better to instead work on the trading rules that historically worked well. That way we can find out how well an approach tended to work in the past and then re-evaluate if it continues to work. One of those approaches is golden crosses and death crosses. So that means when two moving averages cross. So we either get a golden cross, a bullish signal, or a death cross, a bearish signal. And I've literally run 40,000 simulations of buying and selling Bitcoin, trying to find out what's the best combination of a slow moving average and a fast moving average. And all we're doing here is to find a proper trading rule, a trading rule that historically worked well. Those moving averages over here worked better than those moving averages over here. The best combination historically for Bitcoin has been the 2-day moving average crossing the 116-day simple moving average. So this is how much and how constantly that strategy outperforms. We're starting our simulation in 2018. Buying and holding Bitcoin would have only returned 22%, but this strategy would have returned more than 150% per annum. So those are annualized numbers. And so based on that trading rule, we should currently be bullish. Based on that trading rule, we should currently bet on rising prices. But I don't feel comfortable doing that, but I still follow those trading rules. Again, because historically it worked very well. Currently, the 2-day simple moving average is above the 116-day simple moving average. We should be betting on rising prices, and that's since the 21st of April. And yes, I bought on the 21st of April, but I don't feel comfortable doing that because, for example, we haven't yet come below the realized price, so the average cost basis of the market. At the end of every bear market in the past, we fell below that realized price, and we didn't this time around. The realized price is at $54,000, but we're clearly not in a bull market anymore. We have already come down by 50%. Roughly. Also, at the end of every bear market, we went into net unrealized loss, and we haven't seen that yet. The average Bitcoin investor is still in net unrealized gains. And the reason why I like those indicators is because it's very hard to value Bitcoin. It's very hard to say this here is the fair price for a Bitcoin because we don't have any future cash flows. With stocks or with property, we can estimate, okay, those will be our dividend incomes, this will be our rental incomes, and based on those incomes, based on the yield that we get, this should be the fair price of the asset. But we don't have that for Bitcoin, and that's the big problem. We have to value it differently, and I think the best way to value Bitcoin or gold or similar kinds of assets is to just look at the average cost basis. What did the average investor pay for that asset? If currently the price is above the average cost basis, some people might consider to take some profit. If the current price is below the average cost basis, then the selling pressure tends to go down because very few people want to realize a loss if long term they're still bullish on the asset. That's the fundamental idea of the realized price and of the net unrealized profit and loss. And both of those metrics tell us that we should still be bearish. But the backtest tells us that we should be taking a risk. And so that's fundamentally a problem with trend following strategies. So this golden and death cross strategy, that's a strategy to follow a trend that has already been established. So we are not necessarily at the absolute bottom of a bear market. We are not necessarily at the absolute top of a bull market, when we are buying or when we are selling. We are simply trading when a trend has already been established. But that in return also means that we get quite a lot of bad signals. Actually, the majority of the trading signals that we get are bad signals. It's simply that the trades that do work out are much larger in magnitudes compared to the rather small losses that we take every now and then. Have a look at the numbers. So our win rate with this long-term winning strategy is only 32%. So in 32% of the cases, we make money with a trade. In 68% of the cases, we are losing. So most trading signals are actually bad here. And so why do we then long-term make profit? It's because the average winning trade is almost 30 times larger compared to the average losing trade. And so psychologically, it's very hard to follow a strategy like this. Maybe that's the reason why it makes money, because it's a loss and another loss and another loss and then a big gain. And then another loss and another loss and another loss and another loss. And then at some point again, a big gain. So we get bad reinforcement several times in a row in order to then get the lucky shot, in order to then get the trade where we actually have a proper establishment of the trend. And so I wouldn't be surprised at all if this is just yet another bad trade. Just have a look at the past. We did get our several fake outs in September of last year. This year is clearly a nice winning trade, but then we've got a few losing trades, then we've got a massive winning trade, and now this could yet just be another losing trade. We could very easily turn bearish again. Just another 1 or 2 days of bad price performance and we have a selling signal again. I also don't really like the TA right now, the technical analysis. We have pretty clearly higher highs and higher lows, but we are at a resistance and we are above our moving average. We should be bullish, but we could very easily also fall below the moving average again and just stay in the trading range. Who says that we're not going this way one more time before we see the actual breakout? And so that's what makes trading so hard. If I were just to judge the situation by itself, I would definitely not buy right now. Many indicators are still bearish, but because I trust the trading rules that historically worked well, I'm still buying and I'm okay if there is a bad trade now. And so instead of deviating from the trading rules and ignore a buying signal, I think it's better to try to refine the signals. So maybe there's a way to have better trading rules, maybe by combining different indicators. So besides the trend following, maybe we can refine a little bit. Maybe we can look at the realized price and filter the buying signals by that. But for now, I'm okay to get stopped out. I think the reason why Bitcoin appreciated in the last few days is just traditional finance. The Nasdaq 100 has hit a new all-time high. The S&P 500 has hit a new all-time high as well. And so Bitcoin, due to correlation, has also appreciated. And that then triggered our buying signal. But when we look at Bitcoin relative to the Nasdaq 100, we haven't necessarily yet hit the bottom. We could potentially see Bitcoin underperform the Nasdaq 100 by another 27% roughly. We're also seeing that recently there was no outperformance of Bitcoin versus the Nasdaq 100. So this appreciation is really not Bitcoin driven. It's not crypto driven. It's just traditional finance pushing up valuations and bringing Bitcoin with it. There is no outperformance of BTC relative to the Nasdaq 100, relative to technology stocks. And there is still the risk of a 27% relative decline. And the question really is, how much more upside potential is there really? The upside potential is maybe, in the best case, 85% or so. But at the end of a bear market, we tend to have much more upside potential. Over here, that's 300%. And that's why I hope that this bear market is not yet over. If we come lower with the Bitcoin price, that's good, because then the risk to reward gets much, much better. There's always the old all-time high as a reference point. If we go down to say 50k or even 40k in Bitcoin, then we've got an easy 3 or potentially 4x to the next all-time high. But we have to trade the market that we get, not the market that we hope for. If Bitcoin was to drop by 27%, it could get very close to the realized price again. And then history would repeat itself again. I'm currently long and I'm currently betting on rising prices, but this can change very, very quickly, and it's okay. It's just another one of those small losing trades to then get the big winner. And we have to take our chances every now and then, because it always feels hard to buy or to sell into a momentum change. If you found this video interesting, feel free to give it a like. Feel free to also subscribe. I publish videos regularly. See you next time here on YouTube, or see you in Premium. This is where you get access to the backtesting tool. This is also where you get access to my personal trades, and of course also to the copy trading. The copy trading that's currently making a lot of money, targeting again 40% per annum. And while we don't know what happens over the shorter term, there can be even a year of no outperformance at all. In the end, it's all about the long term, being able to outperform buying and holding Bitcoin over the years. Thanks for watching and see you next time. Cheers.